The dollar slumping, gold hitting a new nominal record high, bond rates, forget about the debt ceiling. The 10-year closed at 279 today. That's a recession call. The money markets are tightening up because of this crazy debt ceiling thing, Don Luskin. How do we get through this? What is your frank and candid advice to investors?
Well, look, I got to tell you, we are in a serious soft spot, no question about it. I think some of the things that Brian said have a lot of merit. We came into this year with some growth momentum. It got derailed by high oil prices and the tsunami in Japan, taking one of the major industrial countries off the grid. And now, just as we had a chance to get our head above water, now this crazy mess in Washington comes along and completely shatters confidence. So we're probably going to extend the soft spot into a third quarter. I mean, it's just a disaster. There's only one way out of it. We have got to find compromise in Washington. Here's my idea for the compromise, Larry. It's simple. Barack Obama wants 2 terms. I want him to have 0 terms. Let's compromise on 1.
All right, that's terrific. But Carly Fiorita, in all seriousness, people look at these numbers, and I forgot to mention the 9.2% unemployment rate, and the job situation has turned back down.
Right.
Don't we need a shock, a jolt to the system? And I don't know where that jolt's going to come from. It's not going to come from the White House. These guys in Congress are bickering over the obvious thing, which is to get the debt ceiling back. They're not really instilling confidence about deficit reduction. They're not reforming entitlements. They're not really throttling back spending. They're not going for the tax reform that you all talked about. What is going to jolt this thing, or are we locked in to this sort of 0, 1.5% growth, at least for the next 18 months?
Well, I certainly hope not. First, I think we need a jolt of certainty. To Don's point, we need to get this debt ceiling behind us. Secondly, I think one of the reasons people are so frustrated by this debt ceiling debate is there has been a very clear and obvious deal on the table for over 6 months now. It isn't rocket science. It involves a significant reduction in spending, tax reform so that we are lowering tax rates and closing loopholes, and a fundamental but pretty basic first step towards entitlement reform. Let's change indexing on Medicare. Let's change the inflation calculations on Social Security. That's a great deal.
It's great. It should have happened, but nobody is doing it. This is what is driving me crazy.
Now,
it's the economy.
well, now the debate, I believe, will begin in earnest. There is no way that Barack Obama or the Democrats or the Republicans can escape this fundamental debate about where is growth and what is the role of government. There's no avoiding it anymore.
I think Carly's absolutely right about that, but the last time we found ourselves in this situation was in the 1970s. Right. Government had grown above 23% of GDP, and the economy was in a malaise, according to Jimmy Carter. We're now hearing that word again. And
we're stressed out, according to the president.
The only way out of it was to elect Ronald Reagan. That we now have the Tea Party, and what's interesting to me is the rank-and-file Republican leadership, the country club Republicans, they don't like the Tea Party. And so I wonder if we're going to get out of this. They're mad at the Tea Party for pushing this debate as far as they did, and I'm kind of mad at the rank-and-file Republican for being mad at the Tea Party. Well, this is ridiculous.
All right, but Don Luskin, one last thought. I've never seen such strong profits and such lousy economic growth. Can you help me on that? It's a very interesting paradigm. Profits are good. I know half of them are global, but that's not a bad thing necessarily. Why is that?
Well, American business has undergone a really amazing revolution. It's not really a technological revolution, it's a managerial revolution, and Walmart has led the way. In the last 15 years, we have learned how to do everything we used to do with a lot less expense, mostly with a lot less people expense. So that's why we have high corporate profits and a high unemployment rate at the same time. And by the way, it's not fair to say, oh, that's a global thing, because other than a couple of countries that really don't have that much impact on American corporate earnings, the whole world is mired in slow growth. I mean, point to a major economy that's doing well. Okay, Germany. Well, what else, right? Yeah. So, you know, the point we've got to get through that. We've got to get through this period where corporations are willing to reinvest the profits from this productivity revolution, this managerial to new jobs. Well, and that comes back to this certainty problem. Who's going to invest in human capital when you have no idea what the rules of the game are?
All right. Well